Um, so I'm Alison Hill. I'm chair of Low Carbon Oxford North. And just to say, thank you all for attending this webinar. We will be recording it and we will be saving the chat so that we can capture the questions and discussion for follow-up. And also we will make the recording available on our YouTube channel. The purpose of today is around raising awareness and understanding of the issues around fossil fuel divestment, highlighting potential solutions, and encouraging individual action. Low Carbon Oxford North is a charity with the geography of North Oxford and Jericho, recently joined. And our strategic aim is to that North Oxford contribute to ambitious CO2 reductions by 2030, including a zero carbon Oxford. And towards that ambition, we are working very closely with community groups involved in zero carbon across the city and in the county. And we're engaging with County Council and City Council and other organisations, and also helping individuals maximise their leverage as we move from individual to societal change. So quite a shift in the way we've been operating over the last 10 years. Before we start, Rebecca, who is our treasurer, is, I'll just put a spotlight on her. Here's Rebecca. She is going to run a poll about where you are from.
So about a third of us are from Oxford, about a third are from elsewhere in the UK, and the rest are either Oxfordshire, Europe, or outside Europe. Thank you so much for doing that.
And the programme for today is we've got Ben Caldecott talking on his role, divestment, and Anna is going to be talking about her role as a campaigner. So can I now introduce Ben, who is the Director of Oxford Sustainable Finance Programme and leading expert in sustainable finance. So Ben, can I hand over to you?
Great, thanks Alison, thank you for that very kind introduction. Can I just double check how long I'm expected to speak for? I'm assuming about 20, 30 minutes, something like that. Is that right? Whilst you respond, I'm going to share my screen. Okay. I didn't hear a reply to that, by the way, but I'm assuming that it's about
20, sorry, I was muted. 20 to 25 minutes.
Cool, wonderful, perfect. So, what am I going to speak about this evening? What I wanted to do, so I'm not going to really speak about or make a 25, 30-minute case for divestment. That's not what I'm going to be doing. What I want to do is to take you through some of the kind of things I'm thinking about as I'm thinking about how we can influence the financial system to affect positive change on climate change and some of the things I think we need to think about. And I wanted to start with a kind of running through some of the different bits of the financial system, because I think often people don't understand how the bits fit together, even people who have got many decades of experience in finance, actually. Many people in finance, understandably, are very focused on their clients. And so that doesn't necessarily mean they understand how the different bits of the system fit together. And so I think it's important to understand that. I'm then going to say a bit about how I think finance can impact the real economy, which to me is the main question. I'll say a bit about divestment versus engagement based on some research I did with colleagues back in 2013, I guess, and some thoughts, as well as some research we're kicking off at Oxford on the future of engagement. And then I'll say a bit about another strand of work. I'll focus on the cost of capital, which is also very relevant. So, and I'll try and keep that to 25 minutes. Okay, so this is a series of slides. They're taken from a foundation called the Telesmarter Foundation, and then PRI have made them into this and I borrowed them. So let's start this sort of conversation about the financial system with asset owners, and we will start and probably end there. Asset owners being a number of different bits of the system. The first being pension funds. So I'm assuming that some of the people on this call, being in Oxford, work for the university, and we're part of the largest pension fund in the UK, the University Superannuation Scheme. The biggest pension fund in the world is in Japan. It's called the Japanese Global Pension Fund, a nice imaginative name, and that's the Japanese Civil Service Pension Fund. And I'll say more about different types of pension fund. Another form of asset owner are insurers. So pension funds, obviously, they take payments from savings, from beneficiaries, and they promise to give them an income in the future. Insurers collect premiums and write insurance policies, and they've got to manage those assets that they take to ensure that they've got funds to pay out liabilities. And pension funds obviously have to do the same thing. And those liabilities can stretch out for many decades into the future. Another type of asset owner are sovereign wealth funds. And these are set up often by resource-rich economies to steward those resources over time. Sometimes countries create sovereign wealth funds to manage foreign exchange risk, maintain dollar pegs, for example. There are different reasons for sovereign wealth funds. Some have, as a result, very long-term horizons. Some are literally saving for future generations, like the largest sovereign wealth fund in the world, which is run by Norway. So Norway, in contrast to the UK, took its North Sea oil and gas and put it into a sovereign wealth fund. But some are, because they're designed to manage liquidity issues, invest in highly liquid assets and are a bit less long-term, or significantly less long-term. Other types of asset owner, endowments, foundations, and also ultra high net worth individuals and high net worth individuals. So ultra high net worths are defined as people with $30 million of investable assets. You add up all of those people, about 250,000 of them, and you add up with more assets than all the pension funds in the world. So a significant group of asset owners. Different countries have different types of asset owners. In the UK, we have a very large pension fund industry, in a similar way to other Anglo-Saxon economies. So the US has a big pension fund industry, so does Canada, so does Australia. Some other advanced economies have big pension funds. I mentioned Japan. We in the UK have a long tail of very small pension funds. So we have, although we have a couple of big ones like USS, which is at about $75 billion, or pounds actually, last time I checked. Many of the ones in Europe, the Netherlands, in Sweden, in Canada, in Australia, and the US, the big ones are several hundred billion in assets. And so there are fewer of them and they're bigger. Whereas in the UK, we have a few big ones at around the 70 to 50 to 60 billion pound mark, 30 thereabouts, and then lots of small ones. Now, the central task, as I was alluding to, for asset owners is this process of asset liability matching. So making sure that you've got assets that can meet your future liabilities, your current and future liabilities. So for a pension scheme, if you're a defined benefit scheme, and you're closed to new members, and all of your members are in the UK, so you've got a lot of sterling liabilities, you're gonna want to have assets that can generate a lot of income so you can pay out your beneficiaries. If you're a defined contribution scheme with lots of young members who aren't near retirement, and of course pensions can get passed on, it means you have liabilities going out for possibly 100 years. And that requires a very different investment strategy. And you might want more exposure to the emerging economies, the large economies of the future, and the technologies and sectors of the future. So all this is pretty basic stuff. But what asset owners do, particularly pension funds in the UK, is they need advice for how they should meet and match assets with liabilities. And so they often speak to investment consultants. And many people wouldn't have heard of investment consultants. It's not a particularly well-known industry, but it's particularly in the US and the UK, a very consolidated one. 3, 4, 5 big investment consultants that basically provide a lot of advice to asset owners, particularly pension funds, about how they can match these, do this asset liability matching. And they will advise them on, what proportion of the asset should be invested in different asset classes, like public equities, the stock market, or in bonds, or in private equity and venture capital, and so on, to make sure that they've got the right balance that allows them to meet their liabilities in the future. And they'll also advise on geographical considerations. Do you want, how much US dollar exposure do you want? How much sterling exposure do you want? And so on and so forth. And so that's what we can come back to, the pivotal role of investment consultants. But obviously what a lot of asset owners are doing is allocating their money to people who can manage it for them, asset managers. Asset managers, the biggest asset manager in the world is BlackRock. You would have heard some of these names, Vanguard, State Street, and so on. And the asset management industry's job is to persuade asset owners to give them their money to manage. But there are lots of principal agent problems in that relationship. Asset managers have relatively short-term horizons. They need to demonstrate that they're making money for their clients relative to their benchmarks every month, every quarter. Asset owners kind of more interested, many of them, in the very long term. And they've also got to invest in understanding that relationship. Are we getting value for money from allocating our capital to the fund management industry? And there's been lots of research, some of it from Oxford academics, on the pros and cons of using asset managers. There are lots of studies that basically say, look, instead of paying these fund managers lots of money, you should have just, in active management, you should have just put your money in a passively managed fund and it would have done better. There's a study that came out last month looking at private equity funds that have managed to take a lot of money from pension funds over the years. And in aggregate, these private equity funds, which cost a lot of money, they charge their clients a lot for their services on the basis they're supposed to deliver better returns for their clients, have actually underperformed relative to just putting your money in a tracker. And so there's a question about whether you want to use asset managers. And so what a lot of asset owners have done, particularly in some countries like Canada and Australia, is they've gone, hang on, this isn't right. We should build up our own capabilities, address the principal agent problem, internalize it, and invest the money in a much more efficient way. We should build teams to do that. So that's one trend we've seen in the asset owner community, particularly in Canadian, Australian pension funds and elsewhere, which is very important. But of course, at the very beginning of this story is the individual, and whether that's the pension fund beneficiary or the citizen in some way, directly or indirectly contributing to a sovereign wealth fund, and so on and so forth. So when we're thinking about engagement, divestment, how we green the financial system, it's really important to understand the nuances on the buy side. Now the next slide is sort of bringing the buy side story on the right hand side with the sell side, the companies, the projects, the employees, and how that money gets to them through different markets. And then also how do asset owners exert control on the companies that they're investing in. So you've got, I've mentioned some of these already, but you've got these markets, stock markets, bond markets, and then different asset classes. You have, and buyers and sellers obviously meet in markets, and stock markets like the London Stock Exchange, for example, exchanges that allow liquidity from buyers and sellers. And so we've got a whole bunch of people and organizations, a complex ecosystem trying to get the money from the asset owners into all these different bits of the global economy. And you have people that are providing research to help them do that. Now you will see at the top, there is this thing, proxy voting agencies, which is quite important for the engagement conversation. So these are organizations, companies that are paid by asset owners to exercise their votes on their behalf. So asset owners, and this is particularly for public equity markets, stock markets. We all own, as pension fund beneficiaries, stocks in different companies around the world. USS, in the case of the University Superannuation Scheme, can't be at every AGM exercising every vote. So what they do is they delegate that to a proxy voting agency that does it on their behalf on the basis of policies that the asset owner will have, and will provide advice on whether and how those votes should be exercised. And sometimes, particularly for more sophisticated large asset owners, they will have their own policies and override some of the advice that proxy agencies, voting agencies use. So these are how the two things come together. And of course, all of this is then nested in a broader ecosystem of regulation, of supervision, of policy, thought leadership, of professions, finance professions, training, education, and the environment as well. You know, the impact, and this is kind of what we're interested in here, right? The impact that all of this activity is having directly or indirectly on the environment, but also on society. And what I've shown you here is a very kind of stylized Anglo-Saxon version of the financial system, right? And if it was China, it would look a bit different, and the government would be on both sides of this story in every way, pretty much. So you take it with a pinch of salt, but it's kind of helpful to understand where the different bits are. And this is kind of where you need to begin if we're going to think about how we influence the financial system, right? Like, okay, so you've got these asset owners, you've got these advisors to the asset owners. The reason I mentioned the consultants before is that they have this in the UK system where we have lots of small pension funds. A lot of these small pension funds, you know, they'll have literally 3 or 4 members or 10 members or whatever, and they'll have trustee boards who have no experience of finance. So it's very tempting for these boards to go, okay, well, we're going to hand over our responsibilities to a fiduciary manager. So this is a service that the consultants can provide, where you basically, the trustees sign over the duty, basically the implementation of what they need to do as trustees to this third party who manages the money, allocates the money on their behalf. And that throws up all sorts of potential conflicts. It's also, you know, if you're the only, because these consultants get, you know, they provide all this advice, it's very easy for boards, trustee boards, to become quite dependent on their consultants. So, you know, a lot of the feedback we've had through research is that we've looked at this question, you know, a lot of trustees are getting, you know, they bring up climate change. Oh, should we do something about climate change or sustainability? And the consultant in the room at the board meeting doesn't really know very much about it. So goes, well, you know, oh, you don't want to go down there. That's very risky. You can't do that. You'll breach your fiduciary duties, blah, blah, blah. And then that kind of closes off the conversation. So the sort of the role of these advisors and how that affects the decision-making of these organizations and the billions that they hold is very interesting. So I wanted to ask a question, given all of this and given just a sort of what you think about who you think's in control, which is the most important bit of this system. And there's a poll, which I think, can I run? Poll 2, yeah, okay, I can do this. So who is in control? So is it, you know, is it the asset managers? And these asset managers are massive, right? So BlackRock's got $8 trillion, $7 trillion or something, aggregating the money from the asset owners, or is it, you know, is it the asset owners themselves? So NBIM is the largest, is the Norwegian sovereign wealth fund, that's an asset owner, or is it the people supervising, regulating the system? Is it you, the individual, or is it us as individuals, as the citizen savers, or is it the government, or is it these advisors that I was telling you about? Or is it the marketplace? Or is it, in fact, the companies? I mean, it's kind of interesting how, you know, we're all talking about, for a long time, these devious, horrible multinational corporations who controlled everything. And suddenly we're now talking all about finance, these evil bankers. And so, you know, or at least that's how the kind of the civil society discourse has progressed. Forget about the companies. I thought that, you know, we've forgotten about the companies in this. The companies could be quite important, can't they? So I'm going to leave the poll open for a bit longer. But I think and obviously me talking might influence the poll results. But you know, a lot of, not very many people have said you or us. Depending on who I do this with, that number goes up quite a lot. You know, and I remember how many people actually know very much about their own pension. You know, unfortunately, pension funds, you know, they'll get the odd letter from their members, but you know, it's not a materially important kind of constituency for them. We have very low levels of financial literacy. So in theory, yes, I mean, you know, we have this power, but we don't exercise it. And this is why the Make My Money Matter campaign that was launched in June is potentially really important, because it's all about kind of improving access and knowledge and mobilizing people. And some NGOs are very focused on that and mobilization. Others are more focused on, you know, the asset owner community, and so on and so forth. So you've got NGOs in this sort of sustainable finance space. You've got this sort of ecosystem of different actors concentrating on different bits of the system. And of course, you know, everyone is right? There's no one single most important bit of the system. I'm just going to end the poll now and share the results with you. But everything is important, but there are clearly some issues that we're starting to tease out here that need to be solved, and they're clearly sources of power, potentially anyway, that are not operating as well as they should. We know that citizens aren't sufficiently financially literate and active, even though they could be. We know that asset owners are disproportionately influenced by their consultants. We know that their consultants and advisors have all sorts of problems, and so on and so forth, right? Now, some other thoughts. And this is kind of how I think about how finance can have an impact on the real economy. So remember, that is the most important thing, isn't it? I mean, we're trying to, so basically to achieve net zero, finance is a necessary condition. It's not a sufficient condition. We could green finance completely, but we still won't have achieved what we're trying to achieve. And that's because other things need to happen, like technology needs to change and the real economy needs to change. But finance does have this really important role in helping to change the real economy. And that's super important. So I think there are a number of ways that you can influence the real economy through finance. And I'd really focus on the second thing here. So the first thing is, you know, the financial product or service, for it to be sustainable or green or clean, obviously it should be supporting clean, green, sustainable stuff. It shouldn't be, there's a whole debate about how you define what is green and sustainable, which I'm going to park. But let's assume that the thing that it's trying to support is sustainable, parking how you define it. The second condition is then around how you can contribute in a number of ways using finance. The first and probably the most important is the cost of capital, and I'll come back to this later. Surely, you know, the sustainable finance product or service should help to reduce the cost of capital for the sustainable thing, or it could help to increase the cost of capital for the unsustainable thing. And this is the main way in which finance influences the real economy, the cost of capital. Another related idea is liquidity. So how easy is it to buy or sell or exit an investment? Obviously you want liquidity to improve for sustainable assets and to be harder, less liquid for unsustainable ones. Another area that's talked a lot about in my world is risk and how you manage climate-related risks or environment-related risks. So does the financial service or product provide that kind of benefit? Can it help? Does the financial product or service encourage or enable companies to adopt more sustainable practices? If that's really important, we'll talk more about that. And then there's a sort of a catch-all for other stuff. You know, some of the sustainable finance agenda can help to encourage other systems in society change, adopt more sustainable things. I mean, this is one reason there's so many people working on finance, right? It's, well, crikey, if BlackRock, if Larry Fink's talking about it, that's gonna, why can't the politicians do something about it? You know, it's a powerful system that influences the media, it influences politics. So there's a sort of systemic thing here. And I'm going to park the third condition because we don't have time to talk about it, but it is important. And so I think what we need to do, this is how I think about it anyway, is that we need to think about how the things that we're talking about, how do they deliver on these 5 things? So, you know, you'll hear a lot about green bonds or green funds. You know, lots of different products and services being marketed as green and sustainable. How do each of those things individually change the cost of capital, change liquidity, provide some sort of risk management function, help companies adopt sustainable practices, or do some other thing that's systemically important? And I guess when sort of trying to link it back to the divestment engagement conversation, which here is example 3, and I don't have time to go through all them all, but a sustainable listed equity fund, or just sort of, so, you know, a fund that's investing in the stock market. How can that fund have an impact on the real economy? Now, if it's investing in a very large liquid market like the FTSE 100, you know, divesting isn't going to affect the cost of capital, because the fund is minute relative to the size of the market. Is it reducing or changing liquidity? Not really, because again, the market's really big and the fund's really small relative to it. Does it provide or enable risk management? Well, it might, depends who's investing in the fund. So if the fund is managing risk, you know, it could provide that risk management function. It also depends on your own portfolio. So it depends on the extent to which it helps you manage risk, depends on your other investments. On D, and this is where we get into engagement, does it encourage or enable companies, the companies it's investing in, to do better things? And the answer is yes, if it can do engagement well. If it can't, it won't. And then for E, does it support systemic change? Well, maybe. I mean, you know, these some people would argue, you know, there's a number of ways you could argue that. So I think for public equities, which is where we mainly talk about engagement divestment, it's not clear to me that divesting has any impact on the cost of capital, and therefore and doesn't have any impact on these other things. It might have an impact, and actually it might have a contribution on risk management if you're divesting from things that are risky. But it's engagement that would have the most impact through D. However, and this is where we can talk more, of course, is it's different for different asset classes. Again, we'll maybe talk about it in Q&A, but so much of the divestment conversation is about stocks. If we talk more about loans, bank loans, for example, you can have a much bigger impact on the cost of capital. So for example, I'm a bank, most countries in the world have 3 or 4 big banks. If one of those big banks stops lending to a company or stops lending to a sector, that will materially affect the cost of capital of the company in that sector. So the divestment conversation, you know, or sort of it differs, the answer differs by asset class. I mean, some things, again, this is sort of stuff that we've done research on, but is well known in the debate. You know, why is divestment a good idea? People argue that it's about stigmatization. You know, you're making it harder for the company to operate, to hire good people. You know, how many Oxford graduates, undergraduates at the moment are thinking about working in the oil and gas industry? It makes it harder to get political access and so on and so forth. So stigma is actually, never mind the cost of capital and stigma. But on the cost of capital piece, you know, large markets versus small pools of capital. However, that's, again, in some areas it's different, where actually the sources of capital that are being divested are large relative to the size of the markets. And you could look at some coal markets in particular, which challenge that a bit. But you need an ultimate sanction in some way. And then there's a sort of an argument about, you know, well, there are unintended consequences if you sell your stock, because, you know, a disinterested party will have it and they won't care, and the company will do something else, or the company will go private and then you won't have any influence on it. Those are all, you know, important arguments that we need to think about. I will just on engagement. I mean, I think both the divestment and the engagement side of things are sort of, the way it's talked about is pretty unsophisticated. Engagement, to the extent that it's practiced at the moment, is largely about investors trying to do shareholder resolutions. Let's get Exxon to get a climate expert on its board. Let's ask Exxon to, or whatever oil and gas company, to write a climate strategy. You're like, okay, are these things really going to change these companies' behavior? Like, give me a break. We can talk more about why that's unlikely to make a difference. And I think what we need to do with engagement to make it much more effective is to adopt new strategies, become much smarter about how we use it, apply it outside of listed equities. And one thing we're doing a lot of work on is what we call place-based engagement. So instead of investors going, let's do this sort of shareholder resolution board level thing, let's focus on trying to achieve change in a specific place on a specific set of outcomes. So it could pick your issue. It could be water quality in Bangladesh. You know, it could be, okay, well, we want to see a measurable improvement in water quality in Bangladesh. We know that a large part of the problem is pollution from the textiles industry in Bangladesh, and so we are going to pull levers. We're going to engage with the fashion brands that buy the textiles from these factories. We're going to engage with the banks that we own that lend to the factories. We're going to engage with the policymakers that we have access to because we're big investors. And we're going to track progress, and we're going to work with partners to achieve change over time through coalitions that are very place-based, that are contextual. And that has a lot of similarities with how NGO campaigns operate around the world. You try and achieve an outcome over a period of time. You mobilize stakeholders around that. You pull the different levers. So I think the thing that's sort of really exciting me, one of the things that's really exciting me at the moment about engagement, is the potential for this we're only really scratching the very surface of what's possible with it. And if you think about what we could do with it, it could be a profoundly significant way of changing environmental outcomes in different places. There are some big impediments to doing that. But I basically think that where we need to go is big financial institutions operating a bit more like campaigning NGOs. So there's this sort of funny, interesting potential learning from each other, collaboration that could happen there. Now, just to sort of wrap up, and sorry, I know I've probably overrun slightly. So the other way of sort of looking at divestment or sort of changing the question. I mean, I think the key thing is really, in my mind, how you persuade decision makers, whether that's companies or investors, that the risks facing the fossil fuel economy are material, and that they're going to become more important, right? And so how do you do that? The first thing you can do is you can create risk. So risk is created through changing policy and regulation. It's created through changing reputational risk. You can create it through litigation. You can obviously create it by disrupting industries. You know, Elon Musk is creating a lot of risk for the fossil industry, right? And this is kind of what some NGOs are trying to do as well. They're trying to realize reputational risks and create litigation risks. Another part of that, though, is it's not just risk creation, it's also foregrounding risks and changing perception of risk. So, you know, risks can exist, but if financial institutions and corporations don't really perceive them or care about them, then that doesn't really change their behavior. So there's a whole piece here around kind of foregrounding risk and changing perceptions of risk that is as important. Well, maybe not as important, but is certainly critically important and needs to complement risk creation. Risk creation itself is not sufficient, is what I'm saying. And we can kind of detect the impact of these two things through the cost of capital. So the cost of capital in the fossil fuel industries changes relative to other things. And that reflects risk. And so, we can understand how these risks are changing, how the cost of capital is changing, how that is varying across different bits of the system and over time. This is a study from colleagues at the Oxford Institute of Energy Studies, looking at the cost of capital facing renewables and some fossil sectors, looking at the early 2010s compared to 2018. And you can see that the cost of capital for wind, solar in developed and emerging markets has stayed about the same over that period, but the cost of capital for fossil has increased significantly. And that is very interesting. Now, what we're doing with OIES at the Smith School is basically extending this project so it covers many more bits of the energy system. And this previous study, just focused on the EU and the US, whereas this will be now global. And we want to track this year after year so that we can track how the cost of capital is changing, can see how risk perception is changing, can see how these two drivers I mentioned before are actually influencing the energy system and financial institutions. So that's something we're doing. Things to emphasize, I think, particularly for Anna and for others who are campaigning, what are the bits of the system that we're trying to prioritize, and what are the changes that we need to make in each? That requires detailed work. I'm not entirely convinced that the divestment versus engagement framing is very helpful, might be very unhelpful. I think we're only beginning to explore the potential of engagement, and I think that's really exciting. And I think we should all be trying to make it as effective as we possibly can. And we should be focused on the cost of capital rather than just kind of exclusion, because that's how you really change the investment calculus. And this isn't it's not exogenous, it's an endogenous thing, right? So people on this call can influence that by either helping to create risk or by helping to foreground risk. And there are different ways of doing that. So it's actually quite empowering to think of it in that way, I think. Anyway, I will stop there.
Thank you, Ben, so much. Rebecca is going to handle the questions that have come through on the chat. So I hope you can spend a few minutes now answering those questions before we go on to Anna.
Yes, thank you so much, Ben. I've been monitoring the questions on the chat, and first thing I want to say is I'm completely ignorant about this subject, and so if I ask questions in a way that doesn't mean anything to you, please just tell me, and we can have a look at how I can communicate them better. I think there are several. Actually, the first one I want to ask is I think probably the last one, or one of the last ones that came through, which is, you said something really interesting about how financial institutions need to be acting more like campaigning NGOs. Could you say a bit more about what you mean by that, and what the motivations might be for the different role holders within those companies to take on that kind of campaigning role?
Yeah, so I think there's a sort of a growing appreciation that financial institutions can and should try and make the world a better place, right? Now we can talk about what that actually, what aspects of that do we mean. Firms will have to figure that out. What does that mean for Norges Bank? What does that mean for the Japanese pension fund? What does that mean for USS? So that's one issue, and one way that they can figure that out is by consulting their members, right, and their beneficiaries in different ways. And not everyone's going to think the same things are important. And what people think is important obviously varies over time and changes. So But what I do think asset owners want to do is they do want to find out what their beneficiaries think about things and focus on their concerns. So for the sake of argument, one of the things that USS members might be, of all the things, maybe climate change is one of them, and then maybe there's a specific climate thing within that, which could be, it could be, electric vehicles in Britain or something. I'm making up the thing, whatever it is. And so how then does USS try and make a difference to that problem? And I think the way that's currently been pursued is, well, maybe we should do some shareholder resolutions on Tata or whatever, because they own Jaguar Land Rover and there's sort of those sorts of mechanisms, and I think those sorts of mechanisms are not particularly effective. So, and there's a lot of people would agree with me. So, what else can they do? And so, this is really about the kind of the testing out the levers of influence that these institutions have. And obviously, if you look at different bits of the system, so the asset managers are also being asked by the asset owners to do this stuff. Their stewardship teams, BlackRock has $6-7 trillion under management. Its engagement stewardship team is like 100 less, right? Tiny number of people. If these people were properly resourced, and they were focused much more on trying to achieve specific outcomes in a limited number of areas, over a reasonable period of time, then I think you could end up with some quite creative and very powerful interventions. So I think, So as I was saying before, there are a number of impediments to that happening. But I think what will happen is that clients will go, look, we want to have an impact through our money, and so it becomes a competitive advantage, right? So BlackRock goes, well, we've got a track record of turning your preferences for climate action into actual action. This is what we did to these companies that we own, or that you own. We're just managing your money. But we've basically borrowed techniques from NGO campaigners or whatever, and this is what we've achieved last year and the previous year and over 5. So I think there is a market competition dimension to this, and I suspect that Larry Fink sees some of that, but there's still a massive long way to go between what's possible and what they're currently doing.
Yeah, great, thank you. And just so thinking about levers of influence and where many of our audience today might be thinking, where do we put our efforts? Could you comment a bit on organisations like shareaction.org and how effective their work is compared, say, with proxy voting agencies? Would you be encouraging people to work through NGOs like that?
Well, there aren't, to be honest, there aren't that many options. I think, but Share Action, Catherine Howarth, their CEO, is excellent. We do a lot of work with Share Action. I've got a lot of time for Share Action, and that model is being replicated in other parts of the world because it's been effective. So yeah, I strongly recommend working with Share Action. Absolutely.
Okay, great, thank you. And then I think because of time, I'm just going to take one last question, which is a really specific one, from Serene Irwin, who says, I'm currently working to get Jesus College Oxford to divest from fossil fuels. At this time, the college is debating whether to switch from passive to active management. No, have I got that wrong? Yeah, so switch from active to passive management. What passive funds would be good to recommend to them if they opt for this? I think I may not have quite got that right, Serene, so please put on the chat if I've not said that right. And Ben, I don't know whether you can make sense of that. I think I may have got it back to front.
Well, it's very happy to talk offline actually, and there have been a number of colleges I've spoken to recently about how do we figure this out. And I think I do think part of it is just sort of getting some consensus with the college community current and past. So thinking about the alumni as well, you know, what are the values of the college community? What are you trying to achieve? And what are the 2 or 3 things you're really passionate about achieving? And then think about how you can have impact. And it might not be just divestment. It might not be divestment at all. It might be a whole range of different things you could do. And to me, that is the key thing, working back from the outcomes you want to achieve and then optimizing from that. And of course, you know, we're very privileged in Oxford in having institutions that do punch above their weight, that you know, if a particular college or if the university decides to do something, you know, that resonates in a way that is not comparable with the amount of money being talked about. You know, we despite having a large UK university endowment, we're a very small asset owner. The collegiate university as a whole is a very small asset owner. Indeed.
But we have some great campaigners here, and we're going to hear from one of those next. So, can I thank you, Ben, on behalf of all of us? And if you want to applaud or use the reaction buttons or anything like that, just to say thank you to Ben. And I'm saying that on behalf of all of us. Thank you so much.
Lovely, thank you. And
I'm going to hand straight over, I think, Alison, aren't I, to Anna Olerinyova. Apologies, I really rehearsed that, and I apologize for not getting it clear, getting it right. So Anna is a DPhil student at Oxford University, and she's an active member and organizer of the student-led Oxford Climate Justice campaign, which successfully campaigned for Oxford University to divest from fossil fuels and follow a net zero investment strategy. And Anna was also one of the leaders of the high-profile St John's College occupation protests earlier this year, and where the fossil fuel divestment and ethical investment were being demanded from the college. And she's an activist with Extinction Rebellion, locally and nationally, and is also working on a number of educational and outreach projects within XR. So huge experience that I think we can all learn from. And Anna, I think you're going to speak for maybe 10 minutes or so, and then there will be time for questions and discussion afterwards. Have I got that right?
Yeah, so I'll talk about 10-15 minutes if that's okay. Yeah, great. So unfortunately, I don't have any slides, so you're gonna have to look at my face for those 15 minutes, but I hope you'll manage that. So the last time I had to give a talk like this about fossil fuels and why we should stop funding them was actually almost exactly half a year ago at the aforementioned St John's occupation, when the efforts of many amazing people over 5 months culminated in a 5-day occupation in the St John's College. And we have just spent the morning finishing off preparations, moving final pieces of equipment into their places, and of course doing legal briefings to all of our participating students. Well, the hour finally came when all the 40-odd students suddenly left our hiding places all around college, and a dedicated crew drove our centerpiece, which was a 4-meter-long scale replica of RSS David Attenborough, or better known as Boaty McBoatface, from a garage in North Oxford to the back entrance of college, where we could smuggle it all the way into the front court undetected. There were a couple of odd tourists and academics standing around, perplexed at what was happening in front of them, as we moored the boat on the lawn. Ignoring the keep of the grass sign, quickly setting up the camp and planning that they would attempt to move us away at any moment. Just as this was happening, our de-escalators took their place with talking to porters. The media team was frantically emailing, on the phone with all the local media, and I was just trying to set up this tent. Now, one of the massive 5-meter bell tents is no easy task to set it up, even in a stress-free situation. When I was suddenly asked to go and make a speech. Now, we didn't plan for this. Despite planning for almost everything else, we didn't plan for this because we imagined the situation to be so much more hostile and difficult that having a time for speech seemed completely out of place. But instead, the scene was oddly serene and quiet, and so I stood up in front of everyone, facing the porters and cameras, and talked to the crowd. I'll be honest, I don't even remember properly what I said. The rush of adrenaline, my heart beating fast, I was out of breath from lugging around heavy equipment. It all muddles together with me explaining that this was to protest St John's continued investment of over £8 million into fossil fuels. The ongoing link to the fossil fuel industry's profits is something which we deem deeply immoral and simply not acceptable anymore, given the role of fossil fuel companies in the climate crisis and its perpetuation. Now, there is a common assumption that activists, especially activists for divestments, are unstudied and underprepared, but I can assure you that the opposite was the case. In the previous months, we'd spent all of our spare time researching the policies, possible alternative investments, targets, strategies, economic reasons behind divestments, including Ben's work on stranded assets. Not to mention all the time spent preparing the kits to facilitate camping in hostile conditions for 40 people in the middle of January, activist recruitment and boat making. But why did we think this was necessary? The college invests over £8 million in BP and Shell alone. With close interpersonal and advisory ties with officials in both companies, and despite numerous petitions and years of campaigning from students, they've remained adamant on refusing to divest. The way of dealing with this was to establish an ethical investment committee to look into and give recommendations into whether it's ethical to invest in, for example, arms trading, tobacco companies, or fossil fuels. Now, establishing a committee to look into an obvious issue is, to me, possibly the most Oxford way of dealing with this problem possible. In response to our action, the president of the college promised to increase student representation on the Ethical Investment Committee and kick out Shell and BP representatives from it. Why were they there in the first place is beyond me. However, at the end of the year, the Bureau has written its horizon policy, which overrides the committee and is about as general and vacuous as you can imagine. So I guess they really just want the boat back. So why camp on a loan for 5 days in the middle of winter? Why are actions like these still necessary? How is it possible that despite all the science and campaigning that has been done over the last 30 years, despite all the targets set for net zero and emission reductions, campaigners and activists all over the world still have to protest and in some cases risk their livelihoods and even their lives in order to draw attention to the climate crisis and attempt to change the status quo? Or let's ask the opposite question. What is it that we hope to achieve? How do we stand a chance against these multi-billion pound global corporations? What do we hope to change? Now, the role of radical activism in shaping the public opinion is a double-edged sword. On one hand, it could discredit the larger, more moderate movement by association. The radical and striking actions of PETA, for example, have alienated many people that could have potentially reduced their meat consumption. The advocacy against even pet ownership has estranged a lot of potential allies, and it is difficult to say what effect they've had on overall meat consumption rates and animal abuse. On the other hand, radical activism can be successful in shifting the public opinion in what seems to be possible by legitimizing a more moderate target that seemed radical before. The UK's net zero by 2050 target, for example, made law last year, seemed like a radical suggestion before Extinction Rebellion, together with the mass destruction of London in spring 2019, brought forward the net zero by 2025 demand. The divestment movement may not actually directly take cash away from fossil fuel companies, but has been shown to embolden policymakers to regulate them more heavily. Bill Mckibben, one of the founders of the divestment movement, has ceaselessly advocated for fossil fuel divestment by major educational, religious, and other public institutions since 2006. A study of US politics in 2015 showed what they called the Mckibben effect, demonstrating an empirical shift in boldness of proposed climate policy and rhetoric in the US following major waves of the early divestment movement. In this sense, the divestment movement has been campaigning to not only remove public and charitable institutions' finances from the fossil fuel sector, which, even if completely successful, would only make a small dent in global fossil fuel market. But more importantly, by getting more institutions to distance themselves from fossil fuels for moral reason, the movement is removing fossil fuels companies' social license. Recently, as we've had, the Oxford University itself has announced it will be divesting from all fossil fuels following years of campaigning by students and lead academics. Starting in 2008, the Oxford Climate Justice Fossil Free campaign has seen the university move £255 million out of fossil fuel investments, a drop from over 8% to below 0.6% in the last 14 years. Now, this is not a completely straightforward divestment, and as Ben has mentioned, there are elements of engagement to it as well. So the university has announced it will follow the engage and divest strategy, giving the companies and investors some time to prove they are on a reliable, achievable, hard net zero path, as outlined by the Oxford Martin Principles. Sorry. If they fail to prove they've taken sufficient steps for net zero, Oxford University will cut its investment to these companies. While this has been seen as failure by some activists who believe that an absolute divestment is the moral imperative, I see it as far from that. Apart from just engaging with fossil fuel companies, the university will be asking all the companies in its investment portfolio to provide evidence of a net zero target plan and commitment to it. This significant addition acknowledges the collective problem of fossil fuel dependency, which requires action from not just the fossil fuel industry, but all those who rely on its products. Additionally, the main target of the campaign was not just to stop funding fossil fuel companies, but for the university to make a statement that they are doing so. Excuse me. And in this way, providing example and guidance to the rest of the world. Unlike other divestment policies which turn their back on the industry for moral reasons, Oxford is demonstrating a path for change, a path not taken by the fossil fuel industry yet, by requiring them to outline a scientifically meaningful net zero pathway and stick to it. And they are listening. In this way, divestment can be conceived of not as the end of the conversation, but just the start, forcing a normative shift and opening up solutions that seemed too radical just months before. This news was picked up by major media outlets and hailed as a huge success for divestment campaigns all over the world. In this example, the University of Oxford has formally removed itself from fossil fuel companies due to their unsubstantiable practices and world-harming potential. Why is this important? By making fossil fuel companies seen as immoral, harming the world to create profit, just like, for example, tobacco companies, we get a step closer to encouraging lawmakers to create and implement new policies, such as ending fossil fuel subsidies, meaningful carbon pricing, and many other potentially life-saving advances in fossil fuel use regulation. It makes citizens much more accepting of potentially limiting bans, such as carbon tax and eventually ban on petrol and diesel vehicles, and provides a strong incentive for the government and other companies to alienate themselves from fossil fuels. Making fossil fuels a matter of morality also gives permission to people to get angry about it and feel upset if not enough is being done to safeguard their children's future, or in fact the lives of many of those in Global South, which is already bearing the brunt of the climate crisis. Unfortunately, the fossil fuel companies are well aware of this strategy. Removing their social license to continue functioning as they are would mean less influence in the governments and other places of power. However, they are also aware of public opinion shifting against it. In fact, they have been working hard and spending millions of pounds on creating their own net zero strategies. Recently, 6 major fossil fuel companies, including BP and Shell, have come out declaring their own plans to become net zero by 2050. The strategies, relying mainly on lowering carbon intensity by selling clean energy and biofuels alongside fossil fuels, as well as carbon offsetting, come well short of what's actually needed. Scientists have been estimating for years that to remain below the IPCC limit of 2 degrees global warming, at least 75% of known fossil fuel reserves will need to stay in the ground. And yet fossil fuel companies continue their fossil fuel exploration with the aim of extracting every last gallon of oil they can find. This strategy, known as greenwashing, is crucial for the companies to retain an image of a modern, caring company that is actively working towards a solution for climate change rather than actively aggravating it. As activists, we need to stay alert towards the shifting landscape of strategies that the fossil fuel companies use to keep us at bay. Their representatives are so ingrained in places of power that, despite providing the largest subsidies to fossil fuels in the EU, the UK government claims that in fact they don't provide any. Excuse me. By twisting definitions of what a subsidy is, the government is able to ignore large petitions to remove these subsidies and direct them towards clean energy. It is clear that a change from the inside, alongside campaigning and activism, is needed, but this has been very slow. Even after 30 years of attempting to direct governments and companies away from fossil fuels, from the inside, we are nowhere near what needs to be done to prevent the catastrophe that is looming ahead of us. In the current situation, after all, we should be talking about negative emissions and not just decreasing them, and yet we are still placing unconditional bailouts at the forefront of our recovery plans for high-emitting industries. The need to protest and continue to push for a moral line of reasonable action has never been higher. Recently, mass civil disobedience has erupted around the world in the form of Extinction Rebellion protests, as well as the Fridays for Future youth climate strikes. These have shifted the debate tremendously, arguably more than 30 years of changing things from the inside have in a year. Alongside these large-scale protests, it is important to also remember all the climate activists that daily put their lives on the line to protect the future of humanity. The debate has shifted, and even though it may not have been enough, more and more people join the movement every day. Additionally, we are changing the public view of the issue, and public opinion is one of the most important factors in decision and policy making. Activists around the world need to create enough of a small-scale crisis with their protests to enable people to realize just how dire our situation is, and ultimately help us tackle the actual crisis that we're facing. Personally, I have joined the climate movement only in April 2019. I always thought that it couldn't be so bad, that the protesters were exaggerating and such a large-scale disruption wasn't necessary. However, during the April 2019 XR protests, I grew curious and I decided to look into the science behind it myself. Now, I'm not a climate scientist, I study biophysics, but I was still able to understand that, in fact, it is that bad. It is so bad to warrant much larger scale of disruption. It is bad enough that not even COVID-19 form of disruption to normal life changed our long-term climate emissions by much. A disruption to normal life, much larger than what we've experienced with lockdown, might be needed to tackle this crisis, especially if fossil fuels don't start to take responsibility now. We are forcing future generations into the most permanent disruption humanity has ever faced. Many people will lose their jobs, and it will be difficult. In fact, to be completely honest, because I know that they're listening here, both my brother and father work in the fossil fuel industry, and I can't blame them for it or any other regular workers. Because for many people, it has been one of the few well-paying jobs opportunities in their areas and expertise, and it will be very difficult to adapt. However, I don't want to be all negative. Over the last year and a half, I've learned a lot, and I had to process a lot of emotions about this topic with major implications for my life and my future. But we shouldn't focus on the downsides of the adaptation that will be necessary to tackle this crisis. Instead, we should look forward to a brighter green future with clean air and safe streets, stable weather patterns and seasonal food, to clean energy and safer jobs and a world that is more equal and just for everyone in it. We may just have to step on a few more lawns to get there. Thank you very much.
Anna, thank you so much. Love your last line. I think what I'm feeling now is we have an amazing sort of complementary expertise and experience with you and Ben. But what I'm going to do is just focus first of all on questions that are addressed to you. And I have a couple that have come up in the chat, and there may be others that are coming up as I speak. The first one is from Barbara Harris-White, and I've also added in a couple of things of my own. I hope that's okay. I think that people during the COVID crisis have really noticed how much anxiety is created as we face big economic disruption. And so I'm thinking that there may be many people who are thinking, not sure about divestment, really, maybe, it's just going to create too much of a crisis. And I absolutely hear what you say and agree with you about there's a much bigger crisis that's lurking behind all of that. But do you think it is possible, as Barbara put it, to reach a zero carbon world under capitalism? Do we need to just accept that there will be a kind of economic collapse which will cause massive hardship, on the basis that is a better solution than allowing the climate apocalypse that you've so explained so well to us?
Well, so I'm not an economist myself, so I can't speak from that side whether it will be necessary or what will create less harm. But in my opinion, a just shift and green recovery is very well possible, and we are very capable of it as nations to simply, shift it ourselves. I don't think economic collapse is completely inevitable. And in fact, I believe that there are so many different opportunities and chances within this new recovery that are just waiting for us to take them. And I do believe in that will happen eventually, and hopefully not too late. And yeah.
Okay, great, thank you. And I'm going to put the same question to Ben in a few minutes' time, but let's have a few more questions for you first, Anna. There's a question about your optimism. How optimistic are you that we can do this at the speed that's needed?
That's a very difficult question. I think it varies day to day based on what I see, what I read most recently, and how I'm feeling. There are days when I'm very not optimistic about this at all. And, I've made some difficult decisions, such as perhaps not having children until this kind of crisis is at least on the pathway to recovery, at least until we're on the path to actually survive this. And these decisions were not made lightly at all. And so you could say that in general, I'm being cautiously optimistic. I wouldn't like to actually, I don't want to put all my eggs in one basket. It is going to be an extremely difficult and long process to go through. But I try to be hopeful because there is not much that you can achieve with despair. I believe that optimism is much more constructive, and what we need to do is to have this kind of constructive energy going forward, because even if we do manage it, it's going to be really difficult, and we need to conserve our energy and our spirits and uplift each other and see the brighter future as it is, and hope for that.
Thank you. And then finally, we have it's not exactly a question, but I'm going to turn it into one. So we have an example from Jane McTaggart of a board of trustees that she's a member of that has responded to the fall in price of fossil fuels by shifting their investments, because actually it's not bringing in the income they need to do their work. And they were not, despite her efforts, they were not inclined to do that before the price fell, because they were concerned about their income. And I think that is a difficult question for many charities. So I guess, but just taking that as an example, what would you say to people about where it's best to put their energy? Should they be trying to do this kind of working from the inside, drawing people's attention to the issues, trying to get a kind of engagement strategy, if you like, rather than divestment? Or should they be focusing on campaigning and protest? And of course, people can do both, but we only have so much time.
I think everyone is suited differently to different aspects of this work. I think we need people to engage with both. And unless you have to be very lucky, very fortunate, and in the right position, the right age, right company to actually engage from within. So I think there's only a very few of us that can actually responsibly and effectively engage from within with companies. Whereas most of us, engaging from within doesn't actually work or create that much effect, and our energy would be much better spent organizing together and putting the pressure, protesting, being an activist, or even just engaging in local politics and trying to force change from within in that way. So, contacting our local, joining a party, contacting our local councillors, trying to get them, writing letters, trying to get them to join that green recovery pathway, divest from fossil fuels, etc. So I think it really depends on what your position is, but I think for most people it's much more effective to be an activist and to protest and to engage on a local level with the politics than it is for then engagement.
Great. Thank you, Anna. I'm going to bring you back in now, if I may, Ben, if you'd like to unmute and great, thank you. So yeah, it's the same question that I asked Anna, that came originally from Barbara. Can we do this under capitalism?
Yeah, and sorry, it's got rather dark in my bit of the world with the lighting, but it's not a choice. I mean, the in the sense that the only choice is to properly integrate these issues into financial and economic decision making, and to make the alternatives to the horrible stuff competitive, attractive, appealing. That's what we need to do. The alternative is not the end of humanity, really. The alternative is some horribly deformed, awful version of capitalism that's probably a bit like Blade Runner. Capitalism, buying and selling stuff, people making money, that's not going to go away. And by the way, I mean, it's the idea that you could ever get rid of capitalism, whatever that, I do think that that's just so, the bartering of goods and services is so ingrained in humanity that any other alternative is not possible. Anyway, so I think that those are the choices really. This deformed version of our society and economy, or something that's able to deliver the solutions and integrate some of these challenges, or all of these challenges. And it's bloody difficult, but I don't think it's helpful suggesting that it's, there's really a different choice. Thank you.
Okay, so I have a final question for both of you, I can see there's another question coming, but let me ask this question, and also just give everyone a heads up that in the last few minutes, what we're going to do is to try to focus on what can individuals who are here in this meeting do. What steps can we take as individuals? What influence do we have? What aspects of the money system are we part of in any way? So you might want to be thinking about that and posting your responses to that question in the chat, so that other people can see the kinds of steps that you're thinking of taking or that you have already taken. And to get us started, I'm going to ask both Ben and Anna to say something about what individuals can do. And I know, Anna, you've talked generally about, they can campaign, but it's kind of specifically what that could be. And so maybe I'll start with Ben, because you've already said something, but we'll come back to you.
What can individuals do? Well, obviously they should vote with their feet. That's, firstly politically, right? So I think policies, political parties that support the transition, that have credible policies. I mean, at least in the UK, we have a good cross-party consensus on these issues. I think one of the things that Anna mentioned, I would slightly disagree with, actually, in relation to earlier in the year or last year, losing track of time with the lockdown. It's very easy. I think it's quite easy to kind of go, it's, it was all the campaigners on the streets that got net zero, and it was a fantastic campaign victory. Actually, there was a huge effort, particularly amongst Conservative MPs, through something called the Conservative Environment Network, to get that over the line. Not something that XR campaigners followed very closely, I assure you, but something that was probably more important than the protests on the street and would have resulted in net zero happening anyway. So it's important to kind of engage more broadly and hear those different perspectives. I think one of the risks with the campaigning approach is that you end up just talking to people of the same political persuasion and forget that you need a more inclusive approach. Anyway, that's a longer conversation. In the sustainable finance world, again, voting with your feet in terms of what products and services you're demanding, creating that voice that we talked about that's missing from citizen savers, from pension fund beneficiaries. If only a few people write letters, nothing's going to change. So making sure that those signals are really clear. But I think the things. It's difficult. I mean, I do think that the biggest lever in all of this is government policy and government action. I really do. So I spend my days talking about finance, but I can see its inherent limitations, and it can make a difference. But we've got to make the bigger changes in the direction of policy, but also technological change as well.
Okay, thank you. That's I think that's really helpful. And one of the things I've really enjoyed about this webinar is the way that some of what you've been saying, Ben, has been, this is really difficult, this is really complex, this is a massive complex system, and we don't necessarily make the changes we need by kind of simple methods. At the same time, individuals may only have access to kind of simple steps, and voting is part of that, but also maybe Anna, you'd like to come in now, and anything you'd like to add about what individuals can do.
So I do agree with Ben in that voting is, voting for parties that have the best, the greenest policies is one of the most important things, but then we also only get to vote every couple of years. So that's not something that we can do very often. I do think that engaging with a political party and trying to make yourself heard joining on a more active level is something that is very important. So just how in Labour, there's a significant portion of people wanting a green recovery and going towards the green system in general. If we can have this in all parties, that would be amazing. And then that could potentially have a much larger effect on any policy than there is. But I think otherwise, trying to make personal consumer behavior shifts if possible. So I know it's not really accessible to everyone, but simply educating yourself what is the most local food source, maybe cutting down on meat consumption, what's what kind of if you're buying a new car, maybe try and buy an electric one or something, or taking public transport more often. Those kind of simple steps. I know everyone talks about it, but I think if enough people do it, they do affect the consumer, the consumer behavior does affect the overall market. And I think that's really important. So I know it's repeated so often, but it's something that's very, very important. I do think also joining local initiatives. So you already said that, I'm pro-campaigning and everything. And I do think that even if before, as Ben mentioned, the Conservative Party was pushing towards net zero, I think even if that was the case, the protest would have sped up the process of voting that in. And in fact, I think I might be wrong, but I don't think it was the Conservative Party who suggested the net zero target in the end. So it's something that, we have known about this for 30, 40 years, and we've been trying to change it from the inside, relying on politicians to change it for the last 30 and 40 years. And they've been basically ignoring us and going really, really slowly. So I think it's time to, read into what you can do locally, like how you can, go help the young school strikers. They're amazing, go help steward with them, supervise them a bit, maybe. These kind of things, supporting your local community, building the ties with community with the aim of having a better, greener world, I think is something that I would recommend doing. Thanks.
Great. Loads of examples there. I'd love it if people would begin to put a few more suggestions or statements of intent in the chat. But what I'm going to do now is thank both Ben and Anna very, very much indeed for everything you brought to this evening. It's been fascinating, and we thank you both hugely. And can we maybe do a little bit of reactions and clapping and so on? We could even try to make a lot of noise, except that of course most people are muted. But I'm going to clap. So, Alison, would you like to finish us off?
Yes, I think you've said everything that I was going to say, really. But Ben and Anna, those were fantastic talks and really kind of got many of us thinking about what our individual actions are. And I think as low carbon Oxford North, we need to assimilate all of this thinking and try and help members to work out what their own actions are going to be. So there'll be some follow on from this webinar, and we will be sharing the video. We will be assimilating what's in the chat, trying to answer some of those questions, and maybe coming back to Ben and Anna as well to if there are things that we need further explanation. So everybody needs to take action now, and we are here as Low Carbon Oxford North to assist at least those people on the call who are in our patch. And we will also be trying to do things across the city as part of our Communities for Zero Carbon, which has got a meeting very shortly actually, and we will reflect on the outcomes of this webinar then as well. So thank you all very much. I think it's been a wonderful evening for all of us attending, and we will see you all very soon. Thank you very much indeed.
Thank you.
Thank you, Ben. Thank you, Anna.
Thank you so much for organizing this.
We are delighted to have you both.